We continue with the third and last video on incomplete records. We now look at goods drawn by proprietor. When the owner of the business takes out either goods or cash from the business, this is known as drawings. Drawings are not business expenses. So drawings should not be included in the income statement. So let's look at the first drawing where the owner of the business takes out cash. If you take out cash, it means cash is going out. So cash should be credited and the drawings account will be debited. The next kind of drawings is when the owner of the business takes out goods for their own personal use. You're going to debit drawings and you're going to credit purchases. These drawings of goods should be recorded at cost to the business and not at the selling price. So they are simply taken out of purchases and should not be recorded against inventories. So let's look at our last example. In this last example, we've got Peter, who is a sole trader, carried out the following transactions during the year ended 31st December X7. Sold 40 units at $100 per unit. Purchased 45 units at $60 per unit. Then his inventories at costs. At the beginning of the year, Peter had 5 units, opening inventory at 60. At the end of the year, December X7 had closing inventory of 8 units at a cost of 60 as well. During the year, he had withdrawn 2 units for his own use, firstly ignoring the drawings. We'll look at the outline trading account, the way it would appear. So sales 40,000 units, 40 units times $1,000 will give us sales of 4,000. Then we compute our cost of sales in the normal way, starting with opening inventory plus purchases. So opening inventory, we had 5 units valued at 60 to give us 300, and then we purchased in the year 45 units at a cost of 60 to give us 2,700. Then we take out the closing inventory, which was 8 units valued at 60, which was 480. Sum those, we get our cost of sales of 2520. The 2520, we now subtract it from the gross profit, from the cost of sales of 4,000 to give us a gross profit of 1,480. We now move to the treatment of the drawings of the goods. So the sales remains the same, opening inventory remains the same. Our purchases, we had purchased 2,700 as our cost of purchases. So you bring in your purchases costs, 2,700. That's when you subtract now the drawings. We drew 2 units. The cost of those 2 units was 60, so 2 times 60 gives us 120. We sum those to give us 2880. Then we take out our closing inventory to give us cost of sales of 2,400. Subtract that from the sales of 4,000, gives us a gross profit of 1,600. Any question?
No question. So like the drawings only affect the purchases in this case, right?
Correct, yes.
Alright. There's no question.
You take them out from the purchases at cost. The drawings should never be included as an expense in the P&L.
Alright, that's fine.
So that concludes our session on incomplete records. Just last 2 points to note: drawings of goods are recorded at cost. Gross profit figure should not include any of those goods which have been drawn by the proprietor. Okay, thank you for your attention.